think we are going into a situation where if this is not managed well, the US dollar will cease to be the reserve currency because the US will cease to be an economic powerhouse. It will continue to be very strong, number 2, number 3 in the world after China and India. And I'm talking about 10 years down the road. But you're going to see a situation where there is no middle class. There's 10% that are wealthy and 90% that are struggling.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. At SDBullion.com, you can order your guaranteed physical precious metal bullion products online, 24 hours a day, 7 days a week. Visit SDBullion.com for more information.
Welcome to another Silver Doctors exclusive interview. Today I'm excited to have my guest, Mr. Lior Gantz, with me from wealthresearchgroup.com. He's a market analyst, an investor, as well as an editor of the Wealth Research Group. So Lior Gantz, it's great to have you back on Silver Doctors.
Thanks for having me.
Well, Lior, I appreciate you having time to sit down with us and share your thoughts on what's going on around the global economy. I want to start off before we get too in-depth into our conversation, because I have a lot of questions I want to get to. But the first question, what are some things that has Lior Gantz concerned, given that we're almost halfway through the year 2019? What are some things you're keeping an eye on?
I think the one thing that should concern everyone is the disconnect between the financial situation, the real financial economic situation in the US, and the way that the stock market behaves. It creates an illusion for everyday people that their jobs are safe and good and are on and they can expect higher wages because corporations flourish. And there's a few misconceptions there that I'd love to address if you don't mind.
No, definitely. I would love to hear more of that. And speaking of which, I actually just came across an article that referenced about some of the growth in the equities market has to do with a lot of corporate buybacks. And so I'm assuming that might tie into those fictitious numbers that we have. But feel free to elaborate more on what you were just starting on.
Yeah. So one thing that's important to understand is that the S&P 500 consists of 504 companies right now, which generate about half of their earnings not from the US. So one thing that's important to remember is that the 500 best US companies actually make, the majority of what they make, more than half, comes from outside of the US. So the US domestic consumption market, the engine growth for the world for the last 30 years, from the 80s onwards, it's just not there anymore. US companies rely on Europe and on Asia and emerging markets more than ever before. And that is an important signal because now Europe is slowing down to a halt. China is getting to a point where it's still very strong, right? 6% growth is amazing, but it's 6% growth is the lowest it's been since 1991. So though it is more than twice the rate of the US and more than 5 times the rate of Europe, it is weakening on its own right. So that is one thing that I really want to stress to people. The real employment, the unemployment rate of 3.6%, the U3, the survey that the BLS, the Bureau of Labor Statistics issues, is false. There is 125 million people that are fully employed in the US and about 25 million that are on part-time. The BLS considers all of them as full-time. More than that, out of those 125 million jobs that are occupied, there could be one person that has 2 jobs or even 3 jobs, and he's considered another individual. They don't consider one person having 3 jobs as one person. It's 3 people. Mm-hmm. So the other thing that they do is they only consider everyone that has applied for a job in the last 30 days as part of their pool. So whoever has not came to the chamber in more than 30 days, they don't count him, even though he's more than stressed than the people who just lost their jobs. So he's in a bigger pearl. And so just those things would get you to about a 7.2, 7.3% unemployment rate, double what they're saying. But if you take it even further, you can reach a point where it's even as close to 11%. So about 30 million people are looking for jobs in the US right now. And that's big because you have about 20 million people that are on minimum wage, and you have about half of the working population that are earning about 30K a year before taxes. There is literally no middle class in America. And the cause of this is actually part of the reason the stock market is booming. Because what happened is in 2008, Mike, what you saw is basically the top officials at the Fed and at the Treasury, so both central bank and government, together between Bernanke, Geithner, who was the Fed, and then Paulson, that was the government. But everyone around them, it's not like those three are dictators. It was a lot of people involved, etc. They decided that they will not let the system fall and crumble and let the free market enterprise cleanse it out. They were too distrustful of what this country can absorb, what the masses can handle in terms of losses and whatever the panic would brought about, that they decided to bail out institutions that have made mistakes and even criminal mistakes. And so what I think America has gone through is a situation where with low interest rates and with QE programs, the corporations have flourished using in part buybacks, but more than anything else, using cheap credit, which for a business is highly important. And not only that, but artificially the demand for stocks over other asset classes has increased because low interest rates make stocks more attractive. And so essentially, if I was told tomorrow, if somebody whispered in my ear tomorrow that, hey, interest rates around the world are going to zero for the next 10 years, I would buy stocks because they would make them even more attractive to me considering the other alternatives, right?
Right.
So this is part of why the recession, the recovery has been so fragmented. Like one person will tell you, hey, I had no recovery. My job still sucks. My wages still sucks. While another person will tell you, hey, I doubled my money in the stock market and etc. It's a very fragmented recovery between haves and have-nots. Mm-hmm. And because more than 60% of the U.S. population has zero stocks and doesn't own a home, for them, the recovery has only been if they have gotten higher wages. What we know is that low-level wages are going down, while high-level wages are going actually up. High-level jobs, are going up, while low-level jobs are going down. So it's not what's transpiring in the U.S. is the rich are getting richer by wages and by profits, while the poor are not participating in the stock market, not participating in the real estate market, and not participating in any meaningful salary growth.
Right.
So,
and there's even more. I saw some recent numbers I mentioned about how people are literally using their credit cards just based upon necessities now to cover bills. As you mentioned, there's not enough savings, so they're using their credit cards for survival purposes. And then also to comment on what you mentioned earlier about how there's an inequality of those that have and those who do not have. Those that aren't aware those that are aware rather have utilized 10 years of cheap money or debt for the most part. And do you think that a part of this whole so-called expansion, the reason it's slowing down is because debt is coming due and corporations are responsible for paying that back now at a time where growth may not be as abundant as it was a while back?
I think what the rich understand, and it's very important for people to understand this, is that the growth is mostly behind you. The U.S. is an economy that functions at an official 3.6 or 3.7 or 3.8% unemployment rate. There's just literally, there is no other place for businesses to keep hiring. So there is no growth anymore. You've hit peak productivity. The next thing after peak productivity is a turning around in productivity, which means companies, in order to stay profitable, will need to either raise prices on the consumer or fire people. There's just no other way to create a margin
Right.
and stay profitable.
And they're firing right now.
When the economy is strong. So when the economy is weak, you can open new markets, open new stores, expand. They literally organically grow. That is 2009, 2010, etc. Now you're 2019. Most people are employed. The economy is very strong overall. And when I say the economy is strong, I don't mean people are flourishing. I mean corporations are flourishing. So it's important to distinct this. Brazil is the 7th largest economy in the world, GDP-wise. The poverty rate is insane. So you can be a very profitable economy, a very strong economy, when the majority of the people are basically toiling away without gaining anything meaningful in life. But as a country, the economy is very strong, right? So because it's concentrated wealth. Yeah. So this is what the U.S. has right now. And so going back to your question, what I think the billionaires and the hedge funds understand, and because this is what I'm hearing from them, is that look, there is no demographics that is going to chase this higher. Even still, you can still have expensive stock market for years on end, but it's not going to grow at 20%. It's going to grow at 2 to 3 to 4% because that's essentially what's left. Now, if you create more credit, it will not create a situation where people will say, okay, I got to get more cheap credit because I can generate an arbitrage here. I can borrow at 3% or 2% and make 6%. Those days are over because you can still borrow at 3%, but you're going to make about 4%. So who's going to take that risk? And that's what's going to happen in the near future. And so if you go to wealthresearchgroup.com, we created like a number of special reports on these subjects. If you go to wealthresearchgroup.com/top, T-O-P, you're going to see a myriad, like a wide variety of special reports on this subject, on what people should understand immediately. Because for the average American, I think he needs to understand that salaries are not going up in the Western world. The investment world is basically closed to anyone who doesn't start off with $100,000 to $200,000 because it's going to grow at about 5% a year. So you're going to double your money every 10 to 12 years. Unless you have a meaningful nest egg going into it, this is not what you should concern yourself about. And what I think people should understand is how to diversify, how to build secondary income streams, or how to pursue careers that do offer rags to riches opportunities. So this is what I think people should need to understand. Almost no job is safe. And nearly every industry can be either automated or outsourced. Nearly every industry. And so there are certain professions and certain skills that if you master or if you pursue, they will offer much more security and longevity and stability. Because what people will go through in the next 20 years, you will see people that are 40 and have changed careers 3 or 4 times. Yeah. Whatever they studied in uni has nothing to do with what they're doing now. And they'll find themselves displaced at 45 with not a lot of savings. And then the government will need to step in. This is what I think is the next stage. If you're going to ask me, what I think will happen is the dollar will become essentially like the yen or like the euro, where they drop the rates to 0 and keep them there. The dollar is going to stay at 0 rates, and they'll print currency, and the Fed will monetize the bonds. So the Fed will essentially keep on buying bonds to keep interest rates low artificially, while the government starts paying some sort of a credit to all the people that are displaced to make sure that they're not becoming above being, besides being poor, that they're not becoming frustrated.
Right. That's the universal basic income or some type of allowance in a sense.
Yes, it is. It's exactly that. That is where the lobbyists and the billionaires are taking the conversation. And I think that is one risk, that this economy, this country will go that way. Now, the true capitalists are saying something altogether different, or I can talk to you about that, but I don't think they will win. Mm-hmm. I think this movement is strong, and for people to say no to free money, tell me when the last time that has happened. If you're poor your kids open an empty fridge, you're going to take government money. You're not going to say to yourself, oh my God, this could cause inflation down the road. Mm-hmm. You're thinking about feeding kids. So if you leave it up to the poor and to the shrinking middle class, you will get more handouts because they are thinking survival.
Yeah. If
you're thinking long term and how to build this country over, there's so many things that I can talk about, but I don't think I think we are going into a situation where if this is not managed well, the US dollar will cease to be the reserve currency because the US will cease to be an economic powerhouse. It will continue to be very strong and number 2, number 3 in the world after China and India. And I'm talking about 10 years down the road. But you're going to see a situation where there is no middle class. There's 10% that are wealthy and 90% that are struggling and trying to survive. This is where I see the U.S. going if people don't understand this and start to take action.
Right. And so you hinted on a lot of great things in that part there. But one of the things here that the people are already starting to feel is the whole pinch on employment. And so as you mentioned before, there is no such thing as job security because we're witnessing right now from the auto manufacturing sector, the retail sector, anybody in the line of work that is not in high demand globally is being challenged right now. Therefore, there will be a lot of people that's misplaced in the workforce. Now, you hinted at diversification. And so what are some ways that people can begin looking at other alternatives to hedging the risk of their current line of work or whatever?
Well, this is the perfect question, and I'm glad you asked it because many times when I'm interviewed, people ask me about, tell me the scariest thing that you want to tell the audience. I also want to talk solutions, so it's a great question. One thing that I think people should understand is that they shouldn't put their, unless they have a meaningful nest egg, they shouldn't put investments at the top of their priorities. If you have a few $1,000s, that shouldn't be what you obsess over every single day. You should obsess about how to increase your income streams, how to create new income streams, how to move into an environment where you're living in a cheaper area or even outside of the U.S. if you can keep your employment, and how you can turn around your career into a career that has more stability and more opportunities. Because here's the thing, 30 out of the 50 states, the number one job is trucking. There are about 1.7 million driver trucks in the U.S. Could you imagine what will happen when the driverless trucks come along? Yeah. And these people are this is the number one job for 30 out of the 50 states. Mm-hmm. So it's a huge deal. And this is not only that. Could you imagine some of these jobs that have been outsourced? Nobody would even think about that many years ago. But even accountants, CPAs, they outsource most of the labor, the actual work, the crunching of the numbers to India, get it back all done and file. So even if your CPAs in the U.S., mostly you can outsource the stuff to outside. Mm-hmm. Architecture, people, the blueprints, drawing boards, they move it to China. The office might be in the U.S., but all the work is done in China. And this is going to continue and expand because the U.S. can't compete on labor. They can compete on quality. And so that's the problem. Only the wealthy can be part of the circle that goes into Silicon Valley or Wall Street or all these other intelligence jobs and high-tech jobs, because the poor, they have a hard time even getting towards tuition and getting into these jobs, which have a ton of competition over them and a lot of networking and connections to get into these jobs. So that's one thing I want to make sure people understand. It's not a fair jobs market at all. And so if you're struggling, you have to work double. That is one of the key things that I want to ingrain in people's minds. The poor will have to work double. And here's some ways to work double. There's so much wealth out there, so much cash on the sidelines from private equity, from hedge funds, from people in your, that live 10 to 15 minutes from your house, and they're wealthy. You need to network with them and present them with opportunities, with business models. If somebody came to me and if an Uber driver would come to, would tell me in that 15-minute drive a business opportunity that I can invest in, that Uber driver tomorrow could be the CEO of a new startup. Mm-hmm. People are looking, it's very true. You need to understand that when there's an haves and have-nots, the haves have a lot of cash and a lot of wealth. They're looking for opportunities. If the have-nots have opportunities, ideas to show them, that's one thing they need to do. If you're struggling, put at least 3 to 4 hours a day where you walk in the streets, networking, understanding what is a great need in the market, and coming up with business plans. That's one thing. That can literally lead you to a blowout year. And I can personally attest that has happened to me in my life. I went through that phase. I knocked on somebody's door that I wanted to get into business with, and I flew to his house, and that's how it started for me in 2009, right after the crash. But this is something you really need to think about. If you're an employee, think about approaching management with ideas. Come up with ideas every single month. You will shine because other people will not do that. In contrast to other people who do the minimum not to get sacked and get the least amount of wages not to get fired, not to quit, which is what the work cycle is. Yeah. You do enough not to get sacked and they pay you enough not to quit. Do the opposite. Be first and go last home and have ideas. Have imaginative ideas. That's one thing. Second, find 2 other hungry people like you. Form a nucleus of people that together you share the common goal to get your families out of the struggle. And together start coming up with ideas, because together you will not quit. So that's the second thing. And network in order to do that. Go to real estate clubs, talk to other people online and offline. Start building that nucleus. Also, think about second income opportunities from your house. It can be even $100 to $200 a month. And it will start making a difference if you save that money initially. It can be more. People take surveys online every single month and make $150 to $200 taking surveys. There's tons of ways. Just get a little bit more so you can breathe, etc. And then you can think about investments later. If you're looking at investments, think about the fact that you want to have cash flow. That's ideally what you want to focus on. And then the rest, look at either hedging opportunities or speculative opportunities, something that you can make 10 to 1. It's going to take a few years, but you can make 10 to 1 or 15 to 1, something big. Don't invest a lot of your net worth in it, but if you find that thing, don't hesitate, because if you have the rest of it, in cash flow opportunities, you can risk 2 to 3 to 4% of your net worth in something that might go down 50%, but it can go up 15 times. That's a good risk to reward ratio, and it can change a life. Yeah. If you put $1,000 in there and it goes to $15,000, it's a great way to start your little nest egg and proceed from there, and your brain will increase in professionalism on how to evaluate venture opportunities or small cap opportunities. So those are the 3 things. Come up with business plans all the time. Let your imagination fire up, and then find rich people. Then look at second income opportunities or at promising career paths. So really think about that. Think of stuff that will not get outsourced and move to those areas. Hospitality, tourism, treating the baby boomers, all of these areas you cannot outsource. Opening up, healthcare. The baby boomers cannot get a massage in China. Somebody needs to treat their back here, etc. Think about these kinds of real estate management, etc. These are things that will not get outsourced, and they're needed. Or the opposite is think of ways to work from home where it doesn't matter where you are, and then you can move to areas that are not expensive to live at, and then you get high wages, but you don't live in Silicon Valley. Mike, there are people in Silicon Valley that are earning $100,000 a year and live in a car.
Or I've done reports. People are living on boats now. People are living in tents now. People live in RVs along. Along the coastal areas is really rough. A lot of people who are high income earners. So
yes, so that's what I want people to understand. Now, one thing that's very interesting is that if the Federal Reserve does go in the way of the yen and the euro and drops rates to zero and essentially keeps them there, they're taking themselves out of the game. So from now on, interest rates will not play a part of the economy. All that will happen is that the government will essentially create the credit, tax, so they will tax the rich even more and allocate funds. This is essentially the only thing that will create ebbs and flows in the economies, how they tax. So you will see a lot of reforms in taxes if we move to that kind of an economy. If we don't, if capitalism prevails, what I think will happen is you will see companies that what they do is they try to train teenagers earlier. So they will try to recruit you if you live in distressed zip codes earlier. There will be like night schools, or during July and August where other people are vacationing, the lower income class will stay in school, and people from Google, from Amazon, they will start recruiting very early on because people will want a promising career path early on. So this is another way that capitalism can come in here and work. And a lot of people are also looking at philanthropy in the U.S. because when you have billions, you don't need billions, right? It's you can either let the government tax you or you can donate, but you don't need it, right? Even if you leave your kids enough forever to live on, you still have enough, right? So this is what's happening in our economy, and you see it also. So there might be a golden age of philanthropy also. Yeah. So this is some of the things, but I think for the average person, he really needs to change his mindset and start hoarding and saving, and looking at better ways to increase his income streams.
Good. Well, Lior Gantz, once again, it's been great having you here at Silver Doctors. Look forward to continue to follow more of your work, as well as having you on in the future to get more of your assessment as we go through this slowdown and the things that will come from that. And hopefully, I hope you're wrong in regards to some of the things the Fed will do. But yeah, you never know.
I hope I'm wrong.
We got to be open to whatever could come our way. But other than that, it's been great having you join us once again. Look forward to staying in touch. And as always, continue to do what you do, my friend. Thank you.
Thank you, sir.